Hey everyone, Ray here from Nest Mortgage, and I hope you're having a great day out there. I wanted to pass this on as over the last couple of months, we've been reaching out to our database of clients, both fixed and variable rates, to connect with them and answer some questions and offer up some guidance. And one of the trends or themes that I noticed consistently with variable rate clients was not only their questions about whether it's time to convert to a fixed, but the pressure that's being applied to them by their banks or financial institutions about converting to a fixed rate, or for those that are coming up to renewal, taking a fixed rate. And they would say things like, you better get in before the next Bank of Canada rate announcement, before they make changes there, or rates are only going to carry on going upwards, and so now is the time to convert. And I take exception to that for a couple of different reasons. And first and foremost is that's not the way fixed rates work. Fixed rates are based on bond trading and bond yields, and that's a market that predicts, right? It expects, it looks forward. So while we are where we are today on the variable rate side of things, that market predicted this mid-June, which leads me to point number two, is that fixed rates likely have peaked, and the same rate you get today on a 5-year fixed is roughly the same rate you got in mid-June. They really haven't changed that much. So it's, in all likelihood, fixed rates have probably peaked, and barring some sort of crazy announcement that goes way outside the expectations of that market next week, there will be no adjustment. They won't even flinch next week, and fixed rates should stay the same. Now, the same way they led on the way up, they will lead on the way down as well. As headlines shift away from the inflation dialogue and now the news cycle is focused more on recession, it's likely that we're going to hang out here for a little while. But on the other side of this, there will be rate drops as the Bank of Canada has to ease their policy into neutral territory and out of restrictive. And what will fixed rates do? They'll lead the charge. They'll predict that bond market will adjust and shift well before the Bank of Canada gets to their endpoint, because that's just the way that market works. So again, now I don't like to make predictions based on the way the last year has gone, but I think it's a pretty safe bet that fixed rates are going to go down over the foreseeable future. And so converting to a fixed rate today or locking into that is probably means you're taking it at roughly the highest point. So shorter term fixed rates, a great option. Variable for those that believe in that line of thinking is still a great option as well. But if you're at renewal, or if you're in a situation where your budget's a little bit sticky, or you're wondering what to do, reach out, connect. If you know anybody in that situation, have them chat with us, because now is a tricky time. I think we're going to edge into things getting a little bit tougher, but on the other side of that is probably some normalcy, and we just need to figure out how to get from here to there. So if you need some guidance or help along the way, would love to connect. Don't hesitate to reach out. Take care out there.